Network evavaako ekako byonna we want tuli kwenda good environment. Members, good morning. I want to thank you for sparing this time to come for this session. I want to apologize. We are starting late. I am human. We are humans. Some things happen, and they happen beyond our control. Very soon we are going to be talking about performance evaluation, and we are talking about managerial performance and economic what? Performance. This one is economic. It is economic, not so. Factors beyond my control. I didn't wake up to say I will find a jam on the way. I didn't invite Bobby Wine to my area. So a journey that normally takes 45 minutes had to take me 2 solid hours. And that's why I came in late. I happened to stay along Masaka Road. And he's going to Masaka for campaigns. So you can imagine what is on that road. And that basically is the reason beyond my control. Traffic has been disorganized, traffic flow. We had to devise alternative routes to reach to town, not the normal routes. But I thank God we are here. Members, papers are just a week away. The pressures are increasing. Adrenaline is flowing at a very high speed. You even find yourself sweating where you are not supposed to be sweating, all in the name of exams. We want to pass. And I strongly believe if we do prepare well in this remaining 1 week, the challenge is some of us, we have not received the leave, and we are likely not going to receive that allowance for leave, not until the examination week. Now, as the Baganda say, akarya amagwa. You know, if you decide to eat something, if you are supposed to take a sour pill, you should be ready to take. You should prepare your throat to accommodate that sour pill. So, given that you have not received the leave, but you still have to appear for the exam, find ways of ensuring that you cover up, create extra time It is very, very unfortunate and very, very bitter on my side. I availed myself for discussions. I opened up a free session every morning. To my surprise, I have 1 or 2 attendants, participants. And you know, being a person not wanting to benefit only a few people, I ended up abandoning the project because, I mean, why would I spare my sleep 4 a.m. to come and discuss and I find only one person? And then afterwards, people will be knocking on my door. Where are the recordings? Where are the recordings? Why do you ask for the recordings if you don't want to attend the class? Sometimes that first-hand information is very important. Anyway, today we are here. We are wrapping up our sessions. We want to see how best do we prepare ourselves for the exam. Members, one thing you need to note is you should be having the course outline with you. You should be having the course outline with you. Nothing is going to be examined outside the course outline. If you have never seen the course outline and your case is just to present yourself in class or listen to the recording, my dear, in class I can skip something and you see it on the course outline. Did you take a personal initiative to look out for that item that the tutor has skipped during the exam? Probably it is what the examiner is going to take interest in. All right? But most importantly, members, the exam does not come only from the course outline. The course outline or the syllabus as it is given to us, our exam comes from the learning areas. The learning areas and the objectives of the paper. That is where the examiner picks the question from. That is why I am starting with the course outline. Not just because we are starting a new course, but I want to re-echo the importance of knowing the learning outcomes of this paper. Because that is where the examiner is going to look at when they are examining us. That is where they are looking at. The learning outcomes of this course, that at the end of this course, the learner should be in a position to discuss the role of a management accountant in an organization. When you look at question number 2, question number 1, either party C, party B, party D, that is where you find that. They will ask you, all right, the role of a management accountant. They ask that question. Ayagala okuwakana ng'owakana. But I will tell you, it is there. And they will give you 3 marks, 4 marks. Learning outcome. It is coming from the learning outcome. Provide advice in different management decision making situations. Every question you are going to have there, they will either say, write a report, write a memo, or advise. Those are the 3 scenarios you have. Write a report, write a memo, or simply what? Advise. These are the learning outcomes. If you don't know the learning outcomes, what are you going to present yourself for during the exam? Develop organizational budgets using appropriate techniques. Budgeting, budgeting, budgeting. Together with standard costing and variance. Bw'oba togisomye, bw'oba tosomye waawo, use this 1 week to do so. It came last week, last sitting, as number 5. It has high chances of coming as number 1. You prepare yourself. It came in 2023 December as number 1. Bw'oba tolabangako question in number 1 eya budgeting, genda ku 2023. They will prepare, of course, they will ask you to prepare a budget, but bateekamu obuntu obulalalala. Sometimes okujjako, but you have to be focused. Olina okuba ng'omanyi template bwetambula. Then from that template is where you're going to pick everything. If they are asking for sales, of course it will not be clear and sales ziri awo. They will bring another concept that you must use to find what? The selling price. To find the quantity. They probably tell you that the selling price is obtained by marking it up or using marginal costing. But the concept is budgeting, and then they bring in other issues. It is possible they can bring a learning curve effect, where you are supposed to use the learning curve formula, y equals to ax power what? Power b, whereby you are supposed to use that to determine the quantity maybe. Application. Tebajja kikuwa nti kiri plain awo. You must use your brain. So if I say budgeting or standard costing and variance analysis, it is not just a must of, you only read that without reading other topics. My dear, look at the way they set that 2023 paper. They were asking for a cash budget. Ngolooza cash budget nyangu. Naye the workings you are supposed to do to get back to that cash budget. Right? Because in cash budget, you are specifically looking at incomes and expenses. Then you have opening cash, closing what? Cash. But how do you get those items we are talking about today? You are going to apply other concepts. Learning outcome number 3. Apply quantitative models to managerial decision making. There are so many quantitative models. Linear programming is one of them. Not so. Is it a model? CVP. Is it a model? Quantitative models in decision what? Making. Apply accounting control techniques to managerial decision. Throughput accounting, backflash costing, life cycle costing, activity-based costing. Big wow. Learning outcome number 5. Planning and control of inventory. Economic order what? Quantity. Safety stock. Byonna biri awo. Wanji? How best have you prepared yourself to attempt this paper? Have you gone through the learning outcomes? Because what we are going to be asked is basically there. Evaluate performance of business segments. In performance, tulina ebintu bibiri: divisional performance evaluation and profitability analysis. That is the topic which we call pricing decisions and profitability analysis, where you are going to evaluate the performance of business segments. Which segment deserves concentration? Which segment is performing better than the other? That is where we are even going to use issues like concepts like limiting factor analysis, right? That's where you're applying those things. Apply advanced management accounting techniques. Members, this is all we need to do to prepare for this paper. Okay? So, some of us do not even know the topics that we are supposed to cover. In this 1 week, we have 16 topics. Have you ever taken interest in knowing how many topics you have? There are 16 topics. Topic number 1 and topic number 2 are basically theoretical. And anything theory, that one comes to support other questions. They can never be asked as single questions. Topic number 1 and topic number 2, all right? That is where you find the issues of information and communication. What are the attributes of good accounting information? The communication process. What bars you from getting the desired feedback? We are talking about noise. That is basically what they ask around that question, that topic. Probably one or two most important topics, sub-themes there, is the value of information and the measurement what? Measurement theory. They have not asked measurement theory for a period of time. I don't know why. Eh? They are good at giving you surprise attacks. Eh? Don't be surprised. The nature and role of management accounting. I told you here, they will be interested in the role of management accounting in decision making and probably issues to do with ethical issues, ethical conduct. But of course, you can look through those things of behavior aspects of a management accountant. But of importance to them will be your ability to tell what the role of the management accounting is in business decision making. What are the ethical attributes? We are first going through the syllabus, members. It's not a waste of time. I am just trying to appreciate what have we been able to cover. I want someone to tell me that I have not seen this, I have not seen that. Right? But I have tried to do my best. Then we have here relevant costs or revenues and decision making. Number 1 and 2 mostly form part of your discussion question. Right? They want to test you whether you know the decision making process. If not, they will ask you to demonstrate the knowledge of the decision making environment or the levels of decision making within an organization. Right? Do you know the decision making process? My interest is not knowing, not testing you on whether you know the definition of what decision making is. That is management and cost and management accounting, because the same topic is there. Here, we are being tested. Do we know the process? Then, as decision makers, do we know the kind of decisions we make, the decision making environment, the levels at which decisions are made within the organization, and the kind of decisions that are made at the different what? Levels. Of course, you have operational, you have managerial, and you have strategic. Not so? Which kind of decisions are being made? You are looking at the decision-making environment. You are making decisions under conditions of certainty, risk, and uncertainty. What kind of condition? Of course, these conditions will come back later when we look at cost what? Estimation and regression analysis. Those things of decision tree analysis. Not so? You have seen later those things. Then, of course, our case will be now when it comes to computation, application. What forms a relevant cost and what forms an irrelevant? What you are being tested for here is the features of a relevant. What are the features of a relevant cost? Do you know them? Muja kola discussion. My dear. What are the features? Mwekiri lwakuba nkyusizza language ndowooza. The characteristics of a relevant cost. What makes a cost or a revenue relevant? Increment, differential, avoidable. Those are the things I'm talking about. N'otuuka mu pepo olina freezing ako sikalabangako. Yeah, pressure tugimanye ebaawo. All right? Then the application. So here in application, normally, we look at the nature of decisions made in an organization, mostly in the short run. Make all, buy. Shut down. Limiting factor. And then special pricing. Now, the issue here is, can you tell? Our case here is not knowing that they are there. Can you tell the relevant cash flows that you need to make a decision? And what is the decision-making point? When are you going to make a decision? At what point are you going to make that decision? That's what we are talking about. We are basically, for example, if you're going to look at a decision to shut down, right? Our case here is, are there going to be any contributions foregone? Because if there is any contribution to be foregone, or that contribution to be lost, then you are definitely going to say, or your advice will be, the company should not shut down. Because where they are asking you to give an advice, these are the things we are talking about. But you are going to find sometimes the decision like limiting factor can be combined with the CVP. One of the tests that I gave you and you dodged, that was the case. I had a question where you had to use the limiting factor to work out your CVP. But I only got 2 people doing that paper. I don't know what happened to the rest of the people. Okay? So those are the decisions I'm talking about. Relevant cash flows. We are basically looking at relevant cash flows. And being relevant means that it is either incremental, it is either going to be leading to an inflow or outflow. And that's what they are looking for. Can you tell? And that will be the basis of your decision. If they ask you a special pricing decision, all right, and they ask you for probably a statement of cash flows, in this statement of cash flows, you are supposed to show when I decline the offer and what happens when I accept the offer, and then the effect of that. What are the relevant cash flows? So you have when you decline the offer, that is you retain the order that you had, or when you accept the offer, what happens and what are the relevant cash flows. So when I talk about cash flows, I'm either going to talk about leading to more income coming in or more expenditures being what? Incurred. And that is the basis of your decision. That it should be seen that if you are to accept a special price, it should lead to more income coming into the what? The business. And that is going to be the basis of your decision. All right. CVP. CVP, it is a concept that we pick from cost and management what? Accounting. So basically, at this level, we are required to know the difference between the economist model and the accountant's model. Once in a while, the examiner can chip in the issues of assumptions, because it is from the assumptions that we shall cover our calculation. Where we say that for CVP to be applicable, that a person should be dealing in a single product or a constant sales what? Constant sales mix. Now, in constant sales mix, it means you are producing more than one product. And in determining the break-even point with one product, one more than one product, okay? They are going to bring you two scenarios where they give you the sales mix and where they don't give you the sales. Where they give you the sales mix, members, the guy is asking you to produce work. Weighted average contribution. Where he doesn't give you the sales mix, it means you are going to compute the sales mix yourself. All right? Therefore, there you use contribution to sales what? Sales ratio to determine the break-even point. Obuntu obwo singa oba obumanyi, ekibuuzo ng'okisoma, look out for those things. It will guide you on what you are going to use. If the examiner talks about a what? A contribution, a sales mix, and gives you 6 to 4, he has already directed you on what you are going to use. You are going to use work. Work leads to output, to units. Okay? Work leads to units. Where they don't give you work or the mix, you're going to use contribution to sales ratio, and it will lead you to sales in shillings. So he can ask you for units, but the question in itself was you are working, you are supposed to first find the sales in shillings, and then you work backwards to get the units. Or he will give you work and ask you for break-even point in shillings. Work leads to units, output. And then you are supposed to work backwards to get. So it means when you have work, look out for the selling price. You must have the selling price. Okay? So you multiply the units times the break-even quantity. The unit, okay, the break-even units, that is the quantity, times the unit selling price to get the break-even sales. Then from there, the other concept that is tested is margin of safety. Margin of safety in relative terms. Not only margin of safety, but in relative. Do you know how to get margin of safety in relative terms? Wanji? It's simply that margin of safety divided by your sales times what? 100%. Wanji? They will ask you margin of safety in relative terms or in percentage what? In percentage terms. You should know, how do I compute margin of safety? That's the only thing. And then you express it in terms of sale and then multiply by 100. Simple. Anyway, those are the things. But also here, you're going to be looking at charts. The profit volume what? Chart, or the sales what? Volume chart. Of course, From your computation in the table, you pick these values, and you can easily construct the what? The chart. All right? Yes. And that is CVP. What is asked to the CVP members is break even and margin of what? Of safety. But I have told you the tricks with CVP. When they give you a mix, all right, the mix leads to units. I mean, where they give you the sales mix in percentages or in ratios, that leads you to quantity. Okay? But where they are silent on the mix and you are supposed to define your sales mix, that one leads you to shillings, break-even point in shillings. However, be mindful of two things. Target profit after, and just simply target what? All the formulas remain the same, but those small adjustments. When they just say target profit, use target profit. Just incorporate it. Fixed cost plus target profit over contribution to sales what? Ratio, or over work. If they give you target profit after tax, then it is target profit over 1 minus T, and everything over work or contribution to sales what? Ratio. In your charts, I've also not given you that. You should be able to demonstrate on a chart your margin of what? Margin of safety. Can you illustrate on the chart your margin of safety? Of course, when we talk about margin of safety illustration, I am talking about being in position to tell your target profit level and the break-even what? Level. The difference between the area between those two is the margin of what? Of safety. Tulifena? Abali online, tulifena? These people normally put some comments here. Have we started? Yes, Mark.
Yes, we are.
The teacher say yes. Your tutor is in jam. I am no longer in the jam. Masala Road, it is Masaka Road. Members, you are welcome for the session. Our session has already started. And in any case, if you have not yet engaged the GIAs, please do so. Otherwise, thank you for attending. Bwambale, I can see you are online. Are we together, Mr. Bwambale?
Yes, we are together.
Great. Now these people using pseudonyms. I am seeing Beniseg, Bonex. All right. So I want to welcome you all, and I hope we are moving together. Please do not hesitate to intercept where you have issues. But most importantly, let's take heed of whatever I happen to say during this session. You have the margin of safety over your sales, break-even sales. Okay. Now, costing systems would be another topic. Costing systems, these are probably some of our quantitative techniques. We use managerial management accounting techniques. We are moving together. Thank you, Charles. We are saying we are continuing to appreciate this. These concepts may not be asked as standalone questions, but most times they are asked as questions to be topics to be applied in other questions. But if you do not have knowledge about them, probably you would be driving into the bush. Liverpool being led into the Nottingham Forest. Wambale, I'm sorry, I know you are supporting Liverpool, but I have to talk about that. Okay. I hope you overcame the Nottingham Forest and now you're back to the track. So some of the concepts here, activity-based costing. Most of the times, you can never have a question directly telling you to compute the cost of the product using activity-based, but you are supposed to apply it. You are supposed to apply it. Maybe for your theory part, you are supposed to know the advantages of adopting APC as opposed to traditional costing method. That is, it comes as a supplement question, a discussion what? Question. Okay? These things of stages involved and what, it is applicable. But what are you going to talk about here? If you're going to look at ABC and knowing ABC, you should be in a position to tell what is my cost element, what is the cost pool, what is the cost driver. That is the most important one thing. You should know your cost element, production cost. What is the cost pool? It is the accumulation of those costs related to production one, or let's say scheduling what? Costs. The cost element is scheduling costs. The cost pool is the amount they have given you. The cost driver, number of production what? Runs. Members note, in an exam they can give you cost drivers and the cost element. But it is possible for one cost driver to be applicable to more than one cost element. It is possible. If I gave you scheduling costs and machine learning costs, both of them can be dependent on production what? Runs. So don't be there and get stuck. Probably one criticism they present over activity-based costing is that identifying a suitable cost driver is always a what? A challenge. Where exact in the situation you find one cost driver being applicable to more than one cost element. Okay? So here the issue is about identify. Now you find that the issue is not knowing that all, but can you apply the concept? And you are going to find that the concept will be applicable in determining profitability. So they will probably bring in the issue of pricing decision and profitability analysis, and they will tell you that they determine the cost using activity-based one. So you are doing two topics in one during the exam. They bring you pricing decision. They say a price is determined after a cost plus a what? A markup. But costs are determined using activity-based what? All right? So don't expect that you'll get a question only in one direction. You combine. So this profitability, it is possible to kuwa CDP, ntekemu ABC, ntekemu pricing decision. So application is what is very important. Of course, in service organization, not so much. But the application you are going to get in the exam is profitability what? Analysis. So this question, this topic is very, very applicable when we come to pricing decision and profitability what? Analysis. Because you are determining a price depending on the cost that you have what? Had. And how are you going to determine the cost? Using ABC. Okay. Okay. The other issue is target what? Target costing. Here, members, I begin with the theory. If you are going to look at the theory of target costing, look at one, the issues of a cost gap. What causes a what? A cost gap. What causes a? Of course, they will bring a calculation where you are supposed to identify that there is a cost what? A cost gap. But when the examiner will ask you what has caused that what? Of course, from the scenario, you can think of anything there. Some of these answers must be obtained from the question. However, don't limit yourself. Buli ekikugira mu mutwe essaawa eyo olina okikola ki? Olina kiwandiika. Gwe kiwali olabyeko mu kiraasi. Sooka otunuulire scenario nga bw'eri mu ki? Mu exam. Look at the scenario the way it is in the exam. Pick whatever you can pick from the scenario. If you cannot pick anything from the scenario, then use your class notes. You have already seen issues of the cost gap. What are you costing? Materials, labor, overheads. You get it? So in any way, you are going to have a cost gap because you use poor quality of materials. Probably you wanted to save and you produced the poor quality, and then the poor quality could not support. So you ended up buying more and more and more materials, all right, which leads to a higher what? Cost. Or there is wastage of materials. People are wasting what? Materials. Or you are producing a product with so many unwanted parts. That is also a reason for the cost what? For the cost gap. You get me? So the examiner is not going to ask you for the reasons for the cost gap. Never. He will ask you strategies of closing the cost gap. So if you don't know what has caused the cost gap, so you will not present good strategy. Well, I am just telling you that the reasons for the cost gap. We are in decision making and advisory. If I ask you the reason for the cost gap, or cost and management accounting in Amobosachi, Kubanga, you do the same topics. Right? You do the same topics, my dear. Here, I am going to ask you for the strategies to close the cost gap. Right? That's what I'm going to ask you. Then, after knowing the strategies, think of the approaches to closing the cost what? And that is where you're going to find reverse engineering. Have you heard of those things? Tear down analysis. They are not cost methods. They are approaches. No. In respect to life cycle what? I mean target what? Target costing. These are approaches to addressing the cost what? The cost gap. You have already known what causes the cost what? How are you addressing that? With what they actually call the approaches. So if you go into the exam, that is the ideal word you are going to find there. There are three. Who remembers the third one? Please go back and read your notes. I know there are three. And the examiner will put the question and put for you three what? And the other thing is, notes, answers in our history. Members, this is a computational stroke theory paper. But the biggest percentage is computation. The examiner will not have that time to analyze your English. If I am going to ask for the approaches, if you know them, so-called stating, explanation, and what you could be taking. Are you getting me? Put reverse engineering. Try to explain with your own words what you mean by reverse engineering. Ebitagenze bulungi nga twesanga ewaddako. Naye when I am marking, remember, they have so many scripts. I'm not saying that you should write wrong things, but you should know the tricks of getting what? Marks. Please don't put the answer in the phrase, answer jiteke walabika. Approaches. Don't explain to me what target costing is. Nkikubuzizanga nkimanyi. You know, we students, we are very funny. We want to show that we have read. But when you are answering, you end up going off track. I have not asked for the definition of target costing. I have not asked for the definition of the cost gap. I am asking for approaches. The following are the approaches to addressing the cost what? Reverse engineering. Tear down analysis. Reverse engineering stroke tear down what? Value chain. Explanation gyoyongerako yiyo. Naye nga answer ogikoze eki? Bw'oba weetaaga na kugibolodinga gibolodinga. Nze bwe mba makinga wali sooka n'ensoma ne okay, sweet. Awo ng'oyiseewo without even reading what you have put there. The examiner will give you your marks. I'm telling you. He has over 1,000 scripts to mark in 1 month. Actually, in 2 or 3 weeks. And compile the marks and submit the results. You are sitting in December. By the time of elections, mujja kuba mulina marks. Who has got time to read all that? Ngokweka answers so. Please. Don't labor a lot to write so many things. Be brief, straight to the what? Much as they are asking you to explain. Explain with a few words. Oh, yes? Approaches to narrowing. Simo bisanga. No, they are causes, all right? Causes of the cost gap, or the strategies to reduce them. But these are more technical. They summarize everything you have put. So the first ones we have put there can be asked in cost and management accounting. But here in MDC, they will ask you those. So someone is saying, then when will I say that I have to answer it this way or the other way, right? So when they ask for approaches, now the strategies will be different from, look out for the phrasing in the question. Has he asked for strategies or has he asked for approaches? Approaches, that is when we talk about reverse engineering, value chain. Life cycle is different from target costing. This is target costing, my dear. This is target what? Costing. Let me see if I have questions in the chat. Who is here? We are moving together. Okay. So the strategies are going to be different from the approaches. All right. Other techniques other than ABC, other than target costing, We have Kaizen costing, life cycle costing, backflash, and throughput. One thing they will always ask you, the examiner will present a case to you and say, using either throughput accounting, life cycle costing, advise members in the order they have given you is what you are supposed to use those approaches. All right. For example, if you look at was it question number 3 of May 2023, he was telling you to use either life cycle costing, throughput accounting, life cycle costing, or device on the type of oven to buy. My dear, kyasoosezza kyosooka. Throughput accounting erina werina okubeera applicable nga tonnagenda kuki life cycle costing. Now with the throughput accounting is related to limiting what? Factor. But there are two things that you must know. They will ask you the throughput accounting ratio, but you cannot compute the throughput accounting ratio unless you have the return per factory hour and the cost per factory hour. But that is not the case. The case is, can you interpret the results of your throughput accounting ratio? Can you interpret the results? What does the throughput accounting ratio show? All right? What does it show? That's what the examiner wants you to know. You can be good at calculation and what, but you are going to miss a mark on the point of advising because you don't know what throughput accounting ratio stands for. We are looking at our ability to recover costs from our profits. The profits we make, are they in position to cover our costs? That is why we say you have a return per factory hour over cost per factory hour. So a throughput accounting ratio of 1 is always preferred. It means that the entity is profitable and it can cover all its cost of what? Production and retain some profit. A throughput accounting ratio of less than 1 shows that the entity is not doing well. It cannot cover its what? Its cost. And that is where the question normally is. All right? Evaluate the performance of the organization using throughput accounting what? Ratio and advise management accordingly. So you should know how to get the return per factory hour and the cost per factory what? Hour. You should be in position to know what is your bottleneck resource. What is the time needed to work on the bottleneck what? Resource. Because that is what is going to help you to determine the cost per factory what? Hour. What is the contribution per bottleneck what? Resource. Because it's going to help you to determine the total contribution and hence the return per factory. Wabanga ebyo tobimanyi mukwano. Awo simanyi kye tuliko. I am just pointing out the key areas. Go to life cycle costing. In life cycle costing, we are going to employ financial management techniques. The issue of discounted cash flows. Era bw'oba oyagala okukola enamba ya life cycle costing nga tomanyi how to apply discounted cash flows, use this time to look at it. Of course, with life cycle costing, take it to be an investment decision that you are going to what? To make. You must know what are my inflows and what are my outflows. A decision will be made if you have a positive, that you are supporting the decision. If it is negative, then you are abandoning the what? The decision. Or if you're going to compare two projects, you'll have a project with a higher value. Present what? Present value. Of course, you should know, how do I compute the annuity, or simply a present what? Value factor. You know those formulas? 1 plus whatever, 1 over. Of course, in the exam, those formulas are given, not so. But it is given sometimes. It's given. Don't need to take out and see. Yeah, the annuity factor is given. The present value factor and the annuity factor, they are given. They are actually the number one formula. Number one and number two. But don't take what? Don't take chances. Ono tatunulanga nayo yafa ku pass paper question ye coach. Okay? Hey, by the way, your paper for level 2, the first comers of level 2, your paper for level 2 is pink in color. Bwe bakuwa olwa yellow kayanirawo bagamba olwo si lwange. Your paper is always pink in color. So the first timers on level 2, the veterans already tuba tukimanyi. Level 3 is color green, blue, green. And level 4, temunnatuukayo. You will cross the bridge when you reach there. Don't worry. So I was commenting on life cycle costing. Life cycle costing, our interest is in knowing our cash flows. When I talk about cash flows, I am talking about your outflows and inflows. But you're going to be mindful of the period, the timing, where you are going to use the present factor and the annuity what? Factor. At the end of the day, you are going to look at the net cash flows. Positive or negative. Where they are positive, it is okay. But then, if you are comparing two projects, one with a higher value will always be preferred. But that is in when you are looking at income, all right? But when it is a cost, the one with the lower cost will be preferred. And now, when we talk about the discounted factors, it's because you'll be assessing the project or the item's value over a given period of what? So it is hard to talk about that without talking for time value of. So the issue of discounting is to acknowledge time value of money. So members who are doing financial management, you know what I am talking about. What on Musoma, you wait. Kaizen costing, that one is linked to total quality management. So as you look at Kaizen costing, also think about total quality what? Management. Continuous process improvement so that you cut down the cost of what? Production. That is the principle under Kaizen what? This is basically theory. And when they ask you about writing something about Kaizen costing, how are yourself out? Awusijja kulimitinga kubanga it is theoretical. But the key thing here to note with the Kaizen costing, it is about process improvement so as to cut down the what? The cost of production. Simple as that. The other theory you can read. I am giving you the key take home about Kaizen what? Of course, they will ask you the principles and what you think about involvement of everyone, decision making, all those things. But when I relate it to TQM is going to bring about, is talking about continuous quality improvement in everything we do. Slightly related to Kaizen costing, but Kaizen in its sense, it is also concentrating on the issue of bringing it down the what? The costs. And that is probably why it is called Kaizen what? Kaizen cost. Backflash. There, we are basically looking at production, determining the cost of production at the end of the production cycle, but working what? Backwards. So you are going to talk about things of variant 1 and variant 2. Those are actually what we call approaches. And you cannot talk about a variant without a trigger point. Maybe here, what you will expect, right, is a theory question about the benefits of backflash costing or the challenges of backflash what? Backflash costing. Basically, that is what I am looking at when it comes to backflash what? Costing. Then, this one, pricing decisions and profitability analysis, almost applicable everywhere. They will be asking profitability what? Analysis. Not directly, sometimes, most times, always what? Indirectly. But the way they will ask, they bring in things of pricing decision, they bring in things of, here, one thing that you are going to find examinable as a sole issue is target, is what? Mm, transfer pricing. Transfer pricing is what we are going to look at. So, pricing decisions, there are so many. You are going to look at how do you reach at the price of a given what? Product. Full cost vis-a-vis marginal cost. If not, you are going to look at transfer pricing. So, full cost, that is what we call cost plus pricing. Okay, when we talk about the approaches of cost plus, it is either a full cost or a marginal what? It is a cost plus something, a cost plus a markup. This cost can either be a marginal cost or it can be a full. When I talk about a full cost, I am looking at variable costs plus fixed cost. Then in the determination of fixed cost, I also kuleteramu issues of absorption. We are determining a fixed cost. Nina kuteramu absorption costing. Now you need to determine the fixed cost on the basis of either absorption costing or activity-based what? So you are determining a cost, now getting more absorption cost. All right? So in this case, you need to know, especially when it comes to determination of fixed cost, the issue of overhead absorption. So you're going to determine what we call overhead absorption rate, which leads to either over absorption or under absorption. And then when you are going to look at marginal costing or full costing, there are issues of incorporating in under absorption, which leads to a loss, or an over absorption, which leads to a gain. Can you make those adjustments? Then target, that one is also related to target costing. Then here, in theory, the examiner will bring you a scenario where he will mention any of those things: price skimming, price penetration, all right? And he will ask you to differentiate. He will ask you to just what? Differentiate. Differentiate between price skimming and price penetration, or price discrimination, or volume bundling. You know? But most importantly, our case is going to be on number 3. Customer profitability what?
It's okay, it's okay.
I'm going to ask my members who don't know the rules of the engagement. In our class, when you enter, you are expected to mute your gadgets so as you do not disturb other participants. It is going to be an embarrassment if you are pushed out of the class for disorganizing the class. Let us hit to the rules of engagement. We have customer profitability analysis. Customer profitability analysis are what you use. And we have the issue of Pareto analysis. They will give you a scenario that so and so is dealing with so many customers. This one is bringing this one contributes this. Where should the management concentrate? Where that is what we call Pareto analysis. I remember we did a question like this in the class, where we did the issue of revenue, right? Segregating or segmenting your customers as either small taxpayers, medium taxpayers, or large what? Taxpayers. So you are looking at the contribution of these 3 people and probably seeing who is hitting the target and therefore who deserves the attention of management. You are going to provide a piece of what? Advice. Transfer pricing. The question is going to come around methods of transfer pricing. How is transfer pricing practiced? All right? How is transfer pricing practiced? And 2, how do we resolve conflicts involving transfer pricing? How do we resolve those conflicts? Negotiated? What else? Temunasoma wow. Negotiation. All right? That is one of them, conflict. Or you are going to take a middle path, like this one and this one. So there are 3 approaches I remember, which we talked about. And then distinguishing between domestic transfer pricing and international transfer pricing. The question normally comes around methods of transfer pricing and ways of resolving conflicts involving transfer what? Transfer pricing. Ebisikali byonna musobola obimanya, naye don't miss out on those 2. Don't miss out on those 2. Risk and uncertainty, another interesting topic. Risk and uncertainty. Wano picking out ekintu kimu, probability and expected what? Value and its application. No one is going to determine to tell you to explain what risk is. No one is going to ask you what is uncertainty. Those ones are assumed knowledge. However, you should know how to use the concept of probability and expected what? Value. Of course, you know that expected value equals the value times its probability. If you don't know that, I'll take you back to Chuti. However, we are supposed to know the degree of uncertainty and the attitudes towards what? Towards risk. Because these ones are going to decide, to determine very much the kind of decision you are going to what? To make. Some of us, we apply this, but apply it unknowingly. Man U against Arsenal, who is going to win? And they say, put your money there. Then some of us will go to the history and see on so many encounters, Man U has faced Arsenal. Man U has won more games than Arsenal. Ogawa naye ha. Bwenteekayo mutwalo nfuna miliyoni. Bwenteekayo 10 nsobola okufuna miliyoni 10. Olyoka otandika naye ha omutwalo tegunnuma. Kale naafuna miliyoni 1. You get it? Then someone will say, ekijja kijje. Nze nkoze eki? Numbye. Njagala miliyoni 10. Risk attitudes. Abamu tutya ki? Risk. We fear risk. And that attitude is called risk aversion. We always want to minimize the loss. Ndeka. I don't know whether Mwambale knows the things of Chivimba. Golo. Mwambale, you know those things?
Ceremony, I don't know them.
Someone says, if you bundle these teams together and you use 10,000, you are likely to win 10 million. But the issue is, all of them must win in your favor. Even if 2 have won and only 1 has not won, you lose the whole money. Then someone says, Kangende one, sure. They call it sure. Arsenal, Birmingham, Arsenal has definitely to what? Even if the win is going to be low, at least I have not what? Lost. So they want to minimize that loss. You get it? Risk attitude. We have the risk averse, we have the risk neutral, and the risk take. Rewards will always go. High rewards will always go to the risk what? The risk takers. For them, they want to explore that unknown because it is associated with high gains. You should know those. Knowing them alone is not enough. What you need to notice is that how do they affect your decisions, the kind of decision you are going to make. The application of this is in number 3. Decision what? Tree analysis. Last sitting, it came. It was number. I've done the revision. It was number 1. Members, given that it was asked, someone would say it cannot come back. You can find it as number 2. Especially when people failed it. How do we know? There's an examiner's report. You can find it as number 2. They may not bring it back as number 1, but they bring back the concept and you find it in number 2. And most times, where they do not ask divisional performance evaluation as number one, all right? The possibility is that they can bring it back together with other topics. Okay? So here we apply the concept of probability and expected what? You should be knowing. What causes a decision tree? Your case is to identify what does the person want to achieve, because that forms the basis of you drawing the decision what? The decision tree. They tell you a university is planning on introducing a new course, but in this introducing a new course, they'll have clients from South Africa, clients from here and here. But they need to advertise. And when they advertise, they will get so many customers like this and this. However, the economic situations will be bad or will not be. Let us that kind of story. So the issue is introducing a new course. The second thing is when you introduce it, you either advertise or you don't advertise. And when you advertise, you are either going to advertise it when the conditions are good or when the conditions are bad. Either if you don't advertise, still you are going to operate in a situation whether they are good or when they are not. Members, that is a very, very complicated. It looks to be simple, but very. If you wrongly interpret it, kabaka wedden. So number one just sitting looked as if it was simple, but if you erred on the decision tree, ebisigadde biba simple. Look at that number. Look at also the number of, I think, was it October 2021? No, not 20. May 2019. It was also decision tree analysis, number one specifically. So members, here, decision tree, number 3 is combined with number 5. When they are asking, number 3 is combined with the number that you are going to come up with your payoffs. Very beautiful, but you are going to use it to answer that. Apply it where you have perfect information and imperfect information, or where you are going to examine the decision-making conditions. Max mean, max, and min max what? Regret. No one is going to tell you to explain what they mean for, right? What they stand for. Rather, you must what? Apply. And you are going to apply them from your decision tree, which you have drawn. For example, max min. The funny thing is, you are interpreting the word from the last one. Min and then the max. You are maximizing the minimum. That's what it means. Max min. You are going to pick out the minimum, but among the minimum, maximize it. That is what it means. Then the max. Look out for the maximum, but out of the maximum options, pick the maximum. Or pick the highest. And then min max regret. Look out the regret, the maximum regret for each option. But then minimize that regret. You are going to look at what is the highest that I can lose. But of all these highest, which one is the lowest? That is min-max what? Regret. It talks about opportunity cost. That I have ABC. From A, the biggest is this. So you are looking at the opportunity cost of not picking A, given the all available options. Then from that, what is the maximum regret? In other words, what is the biggest deviation from the option you have selected? And then you go on like that and like that. How do you reduce risk? And what are the risk diversification strategies? That one comes as a theory. All right? Waliwo nakano ke mubuuka management control system. Here batera okubuuzaako responsibility center, ne bakubuuzaako n'ekintu kya controllability principle. It comes from this topic. This topic fits directly into divisional performance evaluation. So you'll find the examiner will ask you to identify the various responsibility center. But can also tell you to distinguish between feed forward and feed backward controls, management controls. What are the types of controls and the different levels of controls within the organization? Of course, you know. You have the highest ones. Strategic controls. Managerial and operational. But what I have seen also is the distinction between feedback and feed forward. Feedback, you are looking at what did I do that didn't go well. And therefore, how do I rectify it so that I can move forward? Feed forward, you are forecasting the future, estimating what would prevent me from achieving my target. How do I work around it so that I have a smooth sailing? Simple as that. Feed forward and feedback control. Bakaleeta oli n'abuukawo mubuusi n'agamba obwo bunambulese mugende mu bitiibwa. Bugende muki? Mu bitiibwa. Tokkiriza. I've also told you about controllability. And the controllability principle is always applied in divisional performance evaluation. What is meant by the controllability principle? And therefore, this leads you to issues of controllable profit or controllable factors and uncontrollable factors. How do you deal, a question how do you deal with uncontrollable factors after the measurement period? Haven't you ever seen that? Normally, they were kubuza before, but bakubuza after the measurement You are looking at things like variance analysis. You are looking at flex budget. You are looking at comparison and using. Therefore, the last one is sijja gikuwa ddayo gisome ogitegeere. Good enough, we have covered everything. Sina kyesisomesanga wano. The approaches, all ways of dealing with uncontrollable factors after the measurement period. Nabagamba tukozesa variance analysis, flexed budget. Nja kikuwa mu bwangu naye nga kirina standard yakyo. Comparison. Okay? Comparison with others of the same level. Neyokuna bagiyita ki? Sijja gikuwa genda oginoonye. Bw'onooginoonya tojja kwerabira. Okay. Then, of course, I told you this topic is normally combined with the divisional performance evaluation. They will tell you that we have so much of this and this targets to be given to the managers and what. So they will ask you, what are the approaches for setting performance targets for your divisional what? Manager. Some approaches are financial and others are none. So how do you set financial performance targets for your managers? Which are the approaches that you are supposed to use? Engineering, historical, and then negotiated. That is how many these people are. Busatu, and they are three. There are three approaches. So either you know or you don't. You don't know. All right. Awo nenvaawo. Tugende mu budgeting and budgetary control. Here, ebyo byonna twabiraba dda mu cost and management accounting. Kyoyinza okubuuza wano era kibasobola okukubuuza is the cash budget or the master budget. If you know how, if you want to revise setting the, constructing a cash budget, go to December 2023. I remember I gave you some of those question papers that you must read through before you go for the exam. In my last class last week, I gave you those papers you must go through. And one of them was that paper. I also told you to go through the model paper. So, here, you can talk about all these other things, beautiful as they look. But your key issue is, you should know how to prepare a cash budget. A periodical cash what? Sisobola kusaba cash budget ya mwezi gumu. Sisobola kusaba cash budget for the quarter, cash budget for half of the what? Of the year. Netaga where you will engage your brain. The minimum you can have is 3 months. But normally they can ask you for 6 what? 6 months. But of course, if you break the cycle on the first quarter, the first month, the rest becomes. Or they can ask you for the whole year, but which year is divided into quarters. That this quarter, and next quarter, the other quarter, and the other quarter. You get it? On a quarterly basis. But then you should also be in position to use your cash budget to produce the master what? The master budget. Then someone was saying, we have never seen a flexed budget. I see your comments, there's a car. I just laugh off because I know now this person might have missed out a class. I have taught a flexed budget. And that is an approach to budgetary control. If you want to keep your budget in control, you must prepare a flexed what? A flexed budget. A flexed budget. Go to question number 1, October 2021. We have practiced that question in class, not so? It gives out how you prepare a flexed budget. Now, there is what we call a reconciliation budget. Reconciliation budget, or a reconciliation of the budgeted profit and the actual profit. We do that reconciliation using variances. If you look at May 2023, question number 5. It has that concept. So if you're going to look at budgeting, members, do not read budgeting without looking at standard costing and variance. I took my time. I didn't rush that topic. I took my time. The examiner is going to require you to prepare a budget from variance. And that is where you have the issues of a flexed budget coming in, the issue of a reconciliation budget coming in. You need to know how to use the variances. Now, with the variance, they will give you a variance, they will give you a target, and you're supposed to use to find the actual. And that is the concept of a flexed what? Flexed budget. So a flexed budget, you are asking the what if question. You are mirroring the current situation in the what if scenario. What if it was this? What would it have been? And what was it actually? And therefore, what is the variance? So the question we did in class was answering that concept. And someone says, "Siranga complexity budget in class." Buambare, I guess you are the one who asked that thing. Did we have a flexed budget? We did, sir. The answer is a very big yes. Bold and in capital letters. Font 19. Okay?
Yes,
So
we
if you are
did.
going to do Ranjifebo,
Yes, we did.
great. I get offended and I feel very bad when someone asks something that I handled and he tries to say, huh? I feel like summoning you to class at that moment. Only that I can't. But if I could, I would summon some people back to class. Okay? Anyway, in budgeting, this theory you can read. Max is even more computation. But they are going to bring you an issue where you are going to use variances. There is no way you are going to avoid variance. Now, the theory around here would be probably the budgetary process and the importance of preparing what? Budgets. Then, you are going to look at the theory also, because I'm combining it with the standard costing and variance analysis. They will ask you the types of standards. Wanji, ngusika face. My friend here is trying to put on a facial expression as to whether I have ever had or whether she has ever heard of such a statement like types of what? You have never heard of that. Types of standard, ideal, standard, basic, standard, attainable. Mukama. Tufudde. Tewasoma gwolwo azokulaba. I spent 3 sessions doing standard variance, standard costing and variance what? They were 3 sessions. Normally they are supposed to be 2, but I used 3 because I didn't want to rush. And the reason is, prepare for it. Prepare for it. Prepare for it. If they have asked something to do with risk and uncertainty. All right? The next thing is budgeting and budgetary control, standard costing and variance work. Of course, there's a possibility of bringing back performance evaluation. But as you read performance evaluation, put the same emphasis on this topic for your number one. And I have a reason for that. In our next session, we are going for a small break. In our next session, which will be a little bit brief, shorter than this one, I'm going to take you through what we should expect during the exam. Question by question. Okay. Now, the question in budgeting is also rotating around leverage. When you look at the model paper, that's why I was telling you to look at the model. That's why I was also asking you to read December 2023. Budgeting, standard costing and variance, there's no way you're going to avoid leverage. Operating leverage and financial leverage all combined. You are assessing the performance of the company using leverage. Do you know what operational leverage is? Do you know what finance leverage is? If you want to revise and see how they set this model paper, and then December 2023. It has not been asked since then. It only came with that time, and it has never been asked again. Of course, I've already talked about variances. How do you determine the variance? But then our issue is, what are the standards? Okay? What is the implication of setting the different types of standards? I've already told you the types of what? Standards. But what is the implication? Okay? Then, part E is very, very important. Disposing what? Disposing what? How do we deal with these variances? Negotiation, transferring them. I guess we have also seen those things. They are around the 4 methods, four approaches, 4 techniques, and that's what the examiner normally what? Asks. Ways of disposing of what? Variances. So here, disposition is that you can know how to calculate. Then part C, part E, discuss ways of disposing of this. Therefore, I have given you 2, Dayono and Darebi. Transfer and negotiation. What about the other 2? Nzemba wako katono katono gwenogena nokola ki newegatirako. Value, add value to yourself. Because we have already seen these things. Division of performance evaluation, a very, very prominent question in number 1 questions. Division of performance evaluation, we normally tend to forget the first part of it, the organizational structure. A question comes around this topic, requiring you to know that they cannot ask you what is a functional organizational structure. They cannot ask you what is a divisional organizational structure. But they will ask you, why would management adopt a functional approach? Why would management adopt a divisional? In other words, what are the circumstances under which you are going to apply those 2? Most importantly, you are going to lose marks if you cannot put on paper this structure. A diagrammatic representation of an organizational structure. Of course, they will not tell you a diagrammatic representation. They use the word called. They use the word called an organogram. You have not heard of that word? Go to December 2020. You will see that question, which requires you to come up with an organogram. Organogram simply means a diagrammatic representation of the organizational structure. Is it functional or is it divisional? Simple as that. If you want to see that, go to, of course, since then it has never been asked. But you think the examiner may not bring it again. You know, the thing is, if it has ever surfaced, it has chances of what? Of coming back. Me, I'm just giving you references where you can pick it and see how it's done. Of course, the issue of organizational structure brings about the concept of decentralization. The issue is knowing what decentralization is, the benefits of decentralization, and probably telling you what are the prerequisites for you to carry out effective decentralization. What are you going to put into consideration to effectively practice decentralization? Now, the part of calculation begins number 2. Right? Number 2, where the examiner will require you to demonstrate your knowledge of what is managerial performance, what is economic what? Performance. Of course, here you have to come out with an operational statement showing what we call controllable profit and uncontrollable profit, and then the organizational network net profit. I gave you that format. I gave you the template. Now, as you measure economic performance or managerial performance, there are measures that we use. 1, return on investment. 2, residual income and economic value added. Did I hear someone asking me for notes about those? Huh? I shared my notes. And even the class notes that I wrote in class, the PDF, I also shared it. But it is okay if you are missing those ones. The only ones I can give you, the ones I wrote in class. If you are to follow them, then you also ask for the recording. But still, I tend to write some notes whereby even if you don't have the recording and you are just following the notes, you can still what? You can pick something. At least I exhaustively covered this. Divisional performance what? Evaluation. So measurement. Measurement is on the basis of return on investment, residual income, or economic value what? Added. Then we have other considerations that here, what the examiner is going to talk about is number 4. Executive contracts and bonus what? Look at part C. Part C is talking about forms of incentive and so you are supposed to distinguish between financial and non-financial incentives. That's where the question is. Financial and non-financial. That is also theory. And then the bonus plans. Cost estimation and regression analysis. Maximization issues. That is normally number 2. Anyway, this is what I was going to look at in my next session. Okay? Let's look at exactly what is all about the topic, and then I will see how the topics are combined for examination purposes. Cost estimation and regression analysis. Here, we are looking at those cost functions. Y equals A plus B X. Because we are talking about regression, you should know how to define A and how to define B. You guys are lucky. They have already provided you with those formulas. But now here the case will be down there. Test of reliability. Coefficient of determination and a standard error of estimate. Can you interpret the result? The issue is about interpreting the what? The result. Can you say that one factor is actually attributed to the results of the other factor? Test of Villa. To what extent can you rely on the results you have computed? Coefficient of determination. Then when you talk about standard error of estimate, how best can you say that this one is used to estimate the other? Of course, and number 4 is there. Number 4 is about learning what? Learning curve and experience curve. Members, you must be in position to draw a line between the learning curve and experience curve. They are almost the same in principle, but there is a slightly different or differentiating factor. Experience is about cutting costs. Learning is about performance of an activity. But all in all, it comes with repeating the activity over and over again. That as you do an assignment, you learn. And as you learn, you acquire methods of doing it better in a short period of what? Of time. But now with experience, you are doing the same thing over and over again. And as you do it, you learn better ways of cutting down the costs. They asked that same question in December 2024. They told you to distinguish between the learning curve and the experience curve. Planning and control of inventory. This is also another section that is of great importance. Here, the concepts asked are economic order quantity and issues of safety what? Safety stock. Your computation. However, these days, they have also turned the attention to another concept called ABC. ABC, determining the value of materials. ABC looks at the valuation of material. In the past, all of us were thinking about safety stock. Safety stock, economic order quantity. Wow, they have changed it. These days they are asking ABC. ABC, you are basically grouping your materials according to the prices. Okay? So it is possible, asobola okukuleetera ABC, ate n'akuleetera ne pricing strategy. Over costing what? Approaches. So ABC, you are grouping your categories of items as either expensive, highly expensive, or moderate, or cheap. Can you tell? Of course, this looks at cost accumulation. Can you accumulate the cost of this product? And therefore, direct the attention of management. So calculations are rotating around those three items. If it is not economic order quantity, it is safety stock. But we get a safety stock to ingizamo probability and expected what? Value. But still, you are not going to talk about safety stock without talking about economic order quantity. Although the concept will require you just to know what your economic order quantity is to determine the safety what? The safety stock. And that is when you find a question like optimum safety what? Safety stock. Whereby you have to identify if the usage is like this and the probability is this, the average usage therefore is this, and that will form your economic order quantity. And then you compare it with the usage against the probabilities. And then you have to determine when are you having stock outs, right? And what is your stock level, safety stock for that matter. So you determine your holding cost and stock out what? Costs. Normally, an indicator will be given in the question, where the examiner will tell you, the cost of stocking out is this, running out of stock is this, and the stock of keeping the stock is this. Then determine the optimum safety what? There will always be indicators. Or it's going to ask you on the basis of the kind of quantity orders to make. When it talks about quantity orders to make, your attention is about economic order what? Quantity orders to make in order to minimize the stock costs. Is talking about economic order what? However, no, the assumptions of economic order quantity. Because those are some of the discussion questions that accompany that. If not, then it's going to ask you about other techniques of inventory control, which include material requirements planning and the just in what? Just in time. Of course, not only that, you have things like a VET, vital, essential, and desirable. You have things like FSN, fast, slow, and none. Linear programming is another interesting topic that you should know. Linear programming, yes, my dear. Pardon? Of course, when they are talking about EOQ, the examiner is going to present you with a scenario of either accepting a discount or not. What is the effect of a discount on the order to be made or on the total cost of managing your inventory? Is it economical for you? Are you going to accept the discount or not? Right? Yes. Linear programming, there are two approaches, graphical or simplex. Last sitting, you had mwalimu linear programming, and it was, I think, graphical. Hey, prepare for it. Prepare for linear. I was thinking na bingi bya kwogerako wabula kyogenda okumanya here, what comes with this is opportunity cost. Not so? The range within opportunity cost applies. And it's the same thing I was teaching those people of August sitting, and surprisingly, it is what came. We did the number like 2 times. I had done it now, and then the next class someone said, I didn't understand it. I had to repeat it. Surprisingly, it is what they found in exam. Or if they don't talk about opportunity cost, what else will they talk about? What do they talk about? What do they talk about? Panange. Food day. Eh? You people. Munimba. Now, this one, the second last topic, memory. Anything that can come. It either comes as a single question, or it can come as a supplement to other questions. Where you can find it coming as a single question, I have seen one is the use of the balance scorecard. Have you heard of the balance scorecard? When you are looking at performance evaluation, we can do performance evaluation using the balance what? December 2024. We had the balance scorecard. If they don't ask you the balance scorecard, they will ask you the just-in-time concept. The effect of the just-in-time concept on inventory management or control costs. I'm telling you where the calculations are. Or total quality management. Those 3 topics involve calculations. The rest are just what? Theory. So if you want to, you already have them. I sent you these notes also. Okay? But over time, I have seen activity-based management, benchmarking, number 4. Number 4, business process, re-engineering. Members, I cannot now start reading these notes over and over again because these are just a theory. Make sure you have these things with you. All right? Management audits, value chain analysis. I think last time they asked business process engineering. There's a time they asked management what? Audits. Value chain analysis. What I was talking about is number 7 and number 8, where they ask some calculations. The just-in-time concept, its effect on inventory management. That's where they normally ask it. Okay? Then total quality management. What is asked in total quality management as a question for calculation is the cost of quality report. Have you ever seen that thing? Cost of quality report. This is a very simple question. The only thing is it requires you to know how to classify these costs. Costs of quality. And they are basically 4. Have you ever heard of those 4 costs? My sister here is as if I am talking something new. Have you heard of prevention costs, appraisal costs, internal failure costs, and external failure costs? People are laughing at themselves. Cost of quality report is dependent on that. Can you identify that this is a prevention cost? This is an appraisal cost. This is internal failure cost. And this is an external failure cost. It is against that you form a report that you use to advise what? Management. Of course, here, if the examiner is to bring you a question, that is what they are going to talk about. Balanced scorecard. Enatukola batugamba tujuze appraisal. Wano baba bakugamba kola appraisal one. You'll be doing what? An appraisal. Of course, you have the financial aspect and the non-financial aspect. The financial aspect, that's where you have the 4 perspectives. Do you know the 4 perspectives? Financial perspective, learning and innovation perspective, process, and what? Wanji? You people, do you do appraisals at work? Eh? The balanced scorecard. You know, they bring these things because they know they are applicable in our daily what? In our daily life. You must know the perspective, the 4 perspectives. And then we have the non-financial part, the behavioral attributes. If you're going to use a balanced scorecard, there are those perspectives, and then there are the behavioral what? Perspective. They would say, in the financial perspective, the target is to increase the sales by this much. Maybe they say 90% or 50%, right? And they say the score is 1. If you hit the target, the score will be 1. So it means that the maximum score will ever be 1. It can never be. Then you multiply your percentage by the score and you get the value. That is what we mean by the balance what? If you want to see how that one is examined, December 2024, question number 4. The balance scorecard was assessed. You know, these things, the best way I can tell you where to read is by looking at the exam. And the contemporary development. Here, the issue is going to be on customer satisfaction. That is number 1, contemporary development. Customer satisfaction. And the effect of the changing product life cycle on performance of an organization. Then, another interesting thing is the OPT. Members, this is a theory. That's why I don't even tend to waste time there. OPT, optimum production technology. What does it stand for? What does it advocate for? It is normally brought in our questions. You will find that hardly will you skip 3 settings without finding this concept of what? OPT. There are 3 things, remember. Business process engineering, okay? OPT, value-based management. BPR and OPT are very common things in our paper. But of course, customer satisfaction comes with, if they ask you about customer profitability, it is always highly probable that you will find customer satisfaction. Factors affecting customer satisfaction. Haven't you heard of that? I have covered that. So members, I want to believe that we have done a very good service to ourselves going through the course content. Now, our next session, what I want us to do is to share on our expectations for the what? For the exam. What kind of combination of topics do we expect in exams? Which topic is most likely to be tested with which topic and in which number? All right? And that is the journey we are going to go through after the break. I don't know. Members, please dictate. How long should our break be? It is coming to 1. How long should our break be? Because I want us to start a little bit early and finish what? Early. So I am suggesting we reconvene at 1:30. Members online, may I see in the comment section your response on that? My suggestion is that we go for the break up to 1:30. Then at 1:30, we come back and have a session of, let's say, 2 more hours maximum, and then we shall have a final blessing for the exam. Comment section, Keramule. Someone says it is okay. Okay. All right, members, let's go for the break. These 40 minutes, 45 actually, should be used for the break. And after the break, we shall come back and finish our session. In the next session, we are going to share on our expectations for the what? For the exam. We meet. Have a nice lunch.